Good evening. This is the video newsletter for Buy Sell Short for Wednesday, July 27th. We are 5 days away from Armageddon. And finally, the market has started to put some pressure on DC. We've been down for the last couple of days, but it really accelerated to downside today, down 200 plus points as the nonsense continues in Washington with the GOP. Let's not get into politics, but I mean, how can you even stand up for these clowns who say they want A, they get A, then they don't want it? I mean, it's all about winning the election next year. Who cares if the economy burns? These teabagger idiots, hey, if you voted for them, this is what you got. These are the clowns holding the cards right now. And, at least this sell off in the market may start to prompt these idiots to actually finally get a deal done. Same thing happened back in 2008 when we had TARP. It got voted down initially, market tanked. All the congressmen rushed and went, oh crap, and then they ended up passing TARP, and we had a fat little big one-day rally on that. Looking at the market right now, there's a reason why we're high cash right now, and this is why. It continued to maintain that 90% plus cash stance. For some of you, may even be better to be flat overnight, 100%. Sleep like a baby, sit back and look at the carnage and look for buying opportunities. I mean, here we had the market down 200 points today, and we had a 75% winner in the chat room, NVGN. So there are trades out there. There's just no need to be risking your capital right now. If and when the debt deal gets passed, there'll be plenty of buying opportunities. And unlike traders who are high long right now, they won't be able to buy anything because they're going to lose all their money in the next couple of days if we have a sell-off. Looking at the 15-minute chart, we are deeply oversold, but that does not mean we can't get more oversold. Looking at the daily chart, you can see a break of 12,300. And we could be looking at another test of that 200-day moving average down at 12K. That would be fantastic, in my opinion, given that we are high cash. Let them burn this market down over the next couple of days. Then we'll have them pass a debt deal, and then we'll have a mother of all rallies. One thing, as I mentioned in the chat room, the Popper scanner, I believe it's an all-time low. I have never, I can't recall the Popper scan ever being this low. The under $5 stocks, we've got a reading of 10. That is a buy signal 99% of the time on the stocks under 5. But I've also got an overall market scan that is printing 20 and after. Oh, right now, the close was 20, a reading of 20. I never remember seeing that. Typically, that means we should look for a very big move in the market over the next 3 to 5 days. The last time we had a really low reading in the pop scan was back in late June, right here, a day before we started that big 800-point rally. So, everyone's talking about default, and the risk is out there. That's why we're not really shopping ahead of an expectation of a rally. We've got some gamble plays that we can do, like Goldman Sachs October calls. We mentioned those in the chat room. October 155 calls for a small gamble. Another way to play this one, and let's look at that chart, SMH. I mean, if and when we get a debt deal, we're going to see a really big snapback in the market, and what's going to lead first are the large caps. SMH, October or September, there's no October expiration. September, $34 calls might give a very nice upside. But again, if you play these gambles, which is exactly what they are, do so small. Otherwise, just sit back on high cash, and then when we get that debt deal, the ceiling increase, there'll be plenty of trading opportunities out there for us to jump in. We are right at supports on pretty much every indice right now. Going into the last 30 minutes, we saw some technical breakdowns on the S&P 500. You can see we have the same thing happening on the Dow. Robots took over late in the day today. If we don't get a debt deal tonight, which the odds of that happening are slim and none, we could see a very nice gap down in the market tomorrow. But that means gap downs bring opportunity, so you got to look at it that way. That is why I've had as high cash every single night as we wait for this debt deal to get made, so that we can sit back and cherry pick our plays like NVGN and some of the other plays that we've had over the last couple of days. So look at this market sell-off as an opportunity. And a couple of things to keep in mind. There's a lot of talk about the S&P or the rating agencies downgrading the debt of the U.S., which would, again, cause possible panic in the financial markets. But as you can see, we're looking at the 10-year Treasury note. We're still at historic lows. I believe the rating agencies have never downgraded a bond that is trading at historic lows ever. A lot of posturing out there, a lot of politicking going on. You know, we got to get through this BS. A deal will be likely made by this weekend, hopefully before then. But if we don't see a deal tonight, definite gap down tomorrow. If we don't see a deal tomorrow, Friday could be really, really ugly. And it's probably going to take a really ugly market move over the next couple of days to get a debt deal done this weekend, and then we could be looking at a big rally next week. So that's our game plan for right now. No need to be brave. You know, keep your hands in your pocket. Don't stick them out there looking for fallen knives and get your fingers chopped off. There will be plenty of trades out there when the risk reward is slanted to our favor. So that's it for the video tonight. You guys have any questions, feel free to send me an email. Otherwise, I will see you guys in the chat room tomorrow. Good night.